Hi, my name is George Dagnino. I'm the editor of the Peter Dack Portfolio. I'd like to talk to you about inflation and the trend of inflation. What is the outlook for inflation? And the reason, of course, is that rising inflation is bad news for the stock market. I showed this subject in a previous video, and I showed how rising bond yields eventually have to be followed by a sharp correction. Only then will yields decline. So if inflation keeps rising, is bad news for the market as well. Now I'm going to use two charts. The first one is a series, this one here is a series of different series of inflation. The lowest one, this one and this one here, one is the producer prices of commodities, and this is producer prices of finished goods. That is, these are prices that charge between producers of goods and services. These two lines here are the consumer price index and the consumer price index of consumer spending. They're basically the same. And the dark one is home prices. The reason I put it here is what you will notice is that home prices tend to lead the overall measures of inflation. So it's very important to see what the trend is. As you can see, home prices started picking up here and inflation follows after 2021. Then home prices here started declining and inflation started declining in 2023. Here started rising again and then inflation rose right after. Now home prices are slowing down again. They're still up 3-4% year over year, but are slowing down, and this is very good news. So what you see out of this chart, though, the latest number in the last 2 or 3 months have shown here that inflation has been rising. In fact, if you look at the producer prices, the growth was negative here, but then it started improving, and as you can see, it started moving higher and higher. So the trend in producer prices, which is more volatile than consumer prices, but has the same turning points, by the way. They don't lead consumer prices. They just have the same turning point, but they are more volatile. The trend is up. That is definitely the trend of producer prices is up. Now, where is inflation going to go? Well, we know that inflation is strictly a monetary phenomenon. In other words, you print money more than the economy can absorb and use, you create inflation. If you slow down the growth of money, inflation declines because people spend less, slower demand, lower inflation. So I'm going to use the chart at the bottom panel. This is M2, the blue line. Here you see started growing faster and was followed by rising inflation a year later. Here started declining around early 2021, and inflation followed suit a year and a half later. Now the M2, the blue line, started rising early 2023, and as you can see, prices responded right away. Right away, this is important, right away, and it started moving higher. So now what I'm saying is prices are becoming more sensitive to changes in the growth of the money supply. Now, the growth of the money supply has been trending higher, and as you can see, producer prices moved higher right away, and now consumer prices are rounding up and rising. So the trend of consumer money supply M2 points to higher inflation. That's the bad news. Now, there might be good news, and this is how the future trends of the money supply. If the money supply slows down, like it happened here, then you will see inflation declining. So this is what will have to happen. Now here we have, I show another series, which is deposits, the red line. The reason deposits at large banks is close to very closely related to the money supply, because really what it is, as the banks get deposits, they lend it to other businesses or people, and therefore that lending activity becomes money supply. So deposits and money supply they're almost the same thing. Now, the reason I show that because deposits are released on a weekly basis. And as you can see here, the growth in deposit has been slowing down in the past several weeks. Is this a new trend? I cannot say. We'll have to see. If the economy slows down and everything, the deposits slow down, then the money supply will slow down. But this is too early to say. So what is the point? The point is the money supply has been rising. Consumer prices have bottomed and have started moving up around 2.789%. So that's the bad news. And it's likely to continue to rise because the money supply has been growing and doesn't show signs of turning down. If the money supply starts turning down in the next 2, 3, 4 months, then the odds are that this upsurge in inflation will stop and inflation will start slowing down again. But this is too early to say. So what is the best information or use of this, what I'm talking about? Well, from a strategy viewpoint, yields, bond yields cannot decline in this environment. That's the bottom line. So the bond market will trade around current levels or even get weaker. Why? Because bond yields, as I mentioned in other videos, are equal to the growth of the money, of the economy, plus the inflation. With the economy now growing close to 3% and inflation at 2.5, 2.7, yields should go around 6% right now. And that's really bad news for the stock market, by the way. So the trend of the money supply points to unfavorable trends in inflation and is creating probably volatility in the stock market because of these conditions. At the Peter Dagg Business Cycle Academy, we have 3 levels of membership. Membership number 1 is videos about business cycle development like the one you just saw. The membership number 2 is videos plus economic and financial updates, usually on a weekly basis. Membership number 3 has the Peter Dagg portfolio, which is a report of 22 pages twice per month. We have videos, we show model portfolios, and we update our members with our trading that we made during the day or during the week. And then, of course, market updates. Thank you very much for following this video. I hope you found it useful for planning your investment strategy. Again, if you want to find more detailed information about our work at Peter Dagg's Business Cycle Academy, videos, information, reports, research, and investment strategy and portfolio management ideas, please go to www.patreon.com/Peter Dagg. Again, thank you very much, and I hope to see you really, really soon. So long, and have a wonderful day.